The other thing I was asked to talk about was the par value of shares and the NAV of funds. Now, it's sort of sad that after 13 years of mutual funds in the country, the mutual funds themselves and the distribution channels have not explained to investors that buying a fund, assuming that everyone is an equity diversified fund, buying a fund with an NAV of, for example, the Quantum Long-Term Equity Fund, 11.8, or buying an NAV of a fund at 30 rupees or 40 rupees, or a new fund offering at 10 rupees, is all the same. It is identical. You cannot say, and you should not say, that an NAV of 11.8 of our fund can double faster than another fund which is diversified with an NAV of 40. Now try and think about this. What is net asset value? Net asset value means you take the fund's holdings, whatever stock it owns, at today's price, and you get the total value of all its shares, and you divide it by all the units it's issued, by all the unit holders out there who have given money to the fund. And you get the NAV per share, the net asset value per unit. So if the market price of someone is 60, if that is the NAV, it's only a mathematical calculation that came to 60. He's exposed to the market at today's price. When I have an NAV of 11.8, that's my market value of my holdings at today's price. The 11.8 is only a mathematical division where my number of units is different. My number of unit holders is different. You should select, is it a better fund management group or not? But when the same fund house is offering you another product, they may call it what they want, but if the investment underlying objective is the same, he's doing it only to please the distribution channel, end of the day. You should just go back and buy that same old NAV of rupees 60 from that old mutual fund house, as opposed to buying the new fund scheme from that old mutual fund house at rupees 10. There's no difference. But the distributor will get 4 and 5 rupees on the new fund NAV of 10. He will get nothing on the old fund NAV of rupees 60. I was also asked about Japan and Germany. Japan is buying into the Indian market. What does that mean? Well, if you think about Japan and Germany as economies and as societies, for those of you who've dealt with the Germans and the Japanese, more so the Japanese now, but even the Germans too, you know that they work by consensus. They think, they will come and they'll listen to you. You negotiate with them, you talk to them, they go back and they think, they don't say, they listen. They nod their head and listen. They decide, it takes them 6 months, 12 months, 18 months to decide. In our industry, we've seen, traditionally, the Japanese and the German are the last to buy. They are the last to buy. Because by the time they've decided, the market has done what it was supposed to do while their money was in it. And it's been around the world. The biggest buyers of internet companies and technology companies in the world were the Germans in 2000. And then the bubble went dead. The biggest buyers of real estate in America in the 1980s were the Japanese. Last year when it was announced that Japanese mutual funds are coming to India, we knew that somewhere down the thing, the end was near. The Nomura vice chairman was in India. I read in the papers. He said, we have to have an India presence. They have said this probably 3 times before. This is a third attempt to come to India. Not that they're a bad company. The process of decision making is in such a way that a fast moving market, when you play musical chairs, or when you play passing the pillow, and the music is going on, and the music suddenly stops, the slowest person is out, right? They tend to be the slowest person. They're holding the pillow when the music stops. So take it as an indication of not so good times generally, to generalize very broadly. Yes, there are always smart people everywhere in the world, no doubt.